at Elara Capital, joining us. Jai, hi, morning, and thanks for your time. So much to talk about when it comes to autos. You have auto sales, you have earnings. Now Maruti came out with its numbers and strong set of numbers over there. Do you expect M&M to be along those lines as well?
Yeah, hi, good morning. So yes, Maruti did report decent numbers in terms of ASPs and also the outlook was steady when they mentioned that going forward they're expecting around a 6% odd growth for Q3, Q4 and beyond, which is still higher than what the growth trajectory was prior to GST cut. So that's an improvement that they are seeing. M&M, yes, did see Q2 EV share, EV mix moving up. They did give, the discounting was there. We are expecting a marginal quarter-on-quarter dip in margins for M&M. Tractors, of course, seems to be steady. So yeah, I mean the commentary will be keenly watched going forward as for autos as well as tractors. I think tractors has surpassed some of our expectations, at least till YTD. So it will be interesting to watch whether there are any upgrades in the tractor full year growth estimates commentary from M&M.
Right. But Jay, I guess it's now more about what's already in the price, be it from Maruti, from Tata Motors, PV, or for that matter from M&M, right? Do you think M&M at this level looks priced to perfection? And do you think the play to bet on could be Maruti perhaps now?
Well, if you see in the last 1 or 2 months, Maruti has outperformed M&M from a returns perspective, given that the expectation of first-time buyers and small cars coming back was a bigger delta for Maruti. In M&M's case, of course, we need to see how the upgrade momentum pans out in terms of the customers who are already there in the market, how they're upgrading from a base variant to a mid variant to top-end variant. So I think M&M will also be a function of that. M&M was any which was outperforming the industry growth by a significant amount of margin over FY24-25 and also 1H FY26. But of course, the incremental delta with first-time buyers coming back was a little more for Maruti. But I think both the stocks have, overall autos, in fact, has done well. And I think a large part of the upgrade in numbers post GST cut is largely factored in most of the stock prices. And now how this demand momentum sustains from Q4 and into FY27 will be the next trigger for the stock prices to move up. Till then, I think we see a consolidation in overall, autos.
Okay, so that's your take on the auto segment. But Jai, if you talk about the October auto sales review in particular, no company has reported anything below estimates. It's rather, it's usually in line or it's actually above estimates. You have names like Tata Motors, TVS, M&M Auto, they've all done well. Which segment do you think could outperform this entire auto sales dispatch in the months to come, and what is your pecking order?
So I think we did see wholesales is a function of the expectation of retails in the festive season and then how the inventory situation pans out going forward. Festive season retails have been pretty strong, and how the momentum sustains post that will be key to watch. And hence we would like to see the wholesale numbers of October from that lens. Now going forward, the sustenance of demand and market share, which companies continue to gain market share, will be the ones to outperform going forward. From our pecking order perspective, both passenger vehicle, two-wheeler, CVs all combined, our pecking order is of course Maruti, Mahindra, TVS. These three would be our top picks.
Okay, Jai, on that note, we'll let you go. Thanks so much for your time today.